stop that there, get straight to some of the dynamic news and analysis coming from Evan Lucas. He's joining us from IG in Melbourne. Evan, good morning to you. It's a Friday. Happy to say so.
It is indeed.
Friday at this time of the month also means that we're waiting for that April jobs read in the United States. It's interesting to note just how lackluster of a session it was for the US dollar, even despite, some pretty positive results coming from the manufacturing sector there.
Yeah, certainly was indeed. So if you have a look at that ISM manufacturing number, it was quite tidy indeed at 54 and a bit. So that is a nice expansion. It was ahead of consensus as well. So that is certainly what we're having a look at. At the moment, there's a really interesting dichotomy going around the US dollar. You can also throw in what happened on the Fed the night before with the fact that, we are on autopilot with that unwinding of asset purchase program. That should be, if you want to sort of put theory around it, that should technically be a US dollar strength situation. But if you look at one of its major pairs in regards to the euro, it continues to go the other direction. The euro is now at 138.8 at the top end, so that was a real interesting development. You may want to say because of the Fed funds rate holding there, that's why you're looking at it. But if you do break down the ISM manufacturing, the ADP number, and also then what's going into tonight with the non-farm payrolls, the employment headcount looks quite positive indeed. Yet the positioning really hasn't come yet. If you have a look inside the ISM, they saw really good growth numbers on that headcount. The ADP number was very, very strong. And this could be the first time since around about mid-2010 that we've actually seen the consensus print above 200,000 and such a strong print above 200,000 jobs added as well. So interesting positioning, and I agree with what you said from John Noonan, is that today could be incredibly boring because of what's going on there and the fact that everybody's waiting for the non-farm payrolls to be almost like a catalyst to really get you excited by the markets, because they are in a bit of a holding pattern. We are waiting to see. Not only that, for us over here in the Asian region, China remains shut for Labor Day, so we're not going to get a really good read as to what is going on regarding that the PMI data we saw yesterday. So watching that quite closely. But again, it's that US dollar trading, the fact that it is certainly still not really strengthening like you'd expect it to, that may make today a little bit dull, and maybe the catalyst to see it leg high if we do actually get that eventual positive print, because the market certainly hasn't put it into their pricing yet.
Not to push the point too much, but do you think it was just a little bit of surprise and shock in the wake of that GDP read that we got yesterday, that quarterly GDP read that was very weather affected? Or, when you take everything from this week into consideration, the fact that there wasn't a lot of new information coming from the FOMC, that there's just not, that catalyst, to really push sentiment about the US dollar and the US economic recovery higher?
Probably, but if you actually have a look at that GDP, removing that headline figure, which was expected to be poor, maybe not as poor as it was, but it was expected to be poor. If you have a look inside that and you have a look at consumer spending and consumer sentiment, that is really quite robust. So consumer spending remains at around about 3%. Now that was lower than the last quarter, I understand, but 3% is still very robust growth for consumer spending. And if you have a look at consumer confidence, you have a look at credit growth that's going on in the US, it's all very positive and steady growth momentum. So that, I would say, is still quite nice there. And if you listen to what the Fed is saying, they see the same sort of situation. They see growth is happening. They expect it to really pick up in the second quarter. They are also expecting job growth to happen there, but at the same time, they want to remain on that accommodative stance to make sure that the economy continues to kick in that right direction. I've seen it being described as a bit of a sweet spot with where they're currently sitting. They're not overheating, therefore they're having to hike rates, but they're not slowing down at all with the unwinding of the asset purchase program. So that's how I see that. It is a fairly sweet spot for the Fed. That's why you didn't hear anything new, because they don't have to tell you anything different, because it's all going the way they want it to. So that's how I see that, and that's why this US dollar movement is quite interesting. You would expect the positiveness to be there, because you would therefore expect foreign investors to be looking at the US economy. Why are you seeing the Dow hitting records? The S&P's not far behind it. Bonds at the moment are going in the direction that most people want them. Yields are going down. Bonds are getting quite nice to be invested in as well. So that is all US dollar strength, yet it sort of hasn't eventuated. So that's an interesting position, and as I said, a dichotomy that's currently going on.
Okay, one to watch. You also mentioned China shut again today. So does that place sort of more emphasis on how the performance of the likes of BHP and Rio Tinto go in Australia today to really sort of be the gauge for iron ore expectations?
I think so, yeah. And having a look at what came out with that China PMI yesterday, everybody's pointing, look, it was another expansion, but it is so slight. And the fact that we've now been stuck in that 50 handle for the last 5 months in China on that, basically the official PMI, so all the state-owned entities, it again would be making a very big headache for the central government over there about how industrial production is going, how they're seeing domestic demand going, whether or not employment is remaining at full employment. All of these kinds of things that China needs to see on a full-term basis is probably slowing down, and that could mean therefore that you're going to see projects that are there, infrastructure projects that are on the books being brought forward, like those rail projects that we saw being brought forward at the end of March, start of April. So that was what I got out of that. The fact that we've also seen, again, like in March, that collapse in the iron ore price, also rebar under a bit of pressure, hot coils as well, because they're having financial crackdowns. We did see that regulation of collateral now coming in at the start of the week. All of that means that you've got an interesting dynamic, and I think for that reason you are going to see some form of government movement on infrastructure rather than the PBOC. So watching BHP and Rio, I think you're going to see them slide over the next couple of weeks as there's uncertainty as how the current demand for iron ore is. You can already see it in copper. Copper came off again last night, and for that reason, I think until you hear from the central government, you may actually see those big players, particularly also Rio, FMG, you can throw Atlas Iron in there as well, coming back because the uncertainty out of China at the moment is there, and that PMI data yesterday certainly doesn't put any confidence that China's moving in a direction you want to see it going in.
Okay, finally, I know we've said that it's likely to be a very boring day around the region today. I guess we do, though, have Macquarie reporting, and that comes in the wake of an interesting move in regards to the ANZ result yesterday. So is this sort of going to be the focus for you?
Look, yeah, Macquarie will certainly be there. I think they'll have a really quite tidy result. The current the current income they're getting out of their investments over in the US will be the key part of that result. I think they have done very, very well over there, considering the trading volumes and the trading activity over the last half particularly will probably drive that result quite nicely. Getting back to ANZ, I'm actually not surprised by that move. It was a stellar result, I'm not going to deny that, but investment banks have found every hole they possibly could to poke holes in it because it didn't absolutely shoot the lights out to push through that record high that we saw Monday, Tuesday. So it was nice, it was tidy, and I expect that is how the banks will operate as well. So come Monday with Westpac, come Thursday next week with NAB, I think you can already see positioning that no matter what they tell you, it's just not going to be good enough, despite the fact that they are record profits. So watch that today. You could see more positioning heading into Monday morning's result from Westpac, and that's the other part of the banking space to watch.
Evan, pleasure speaking. We'll check in with you a little bit later on.
Thanks, Nadine.
Evan Lucas joining us from IG in Melbourne there.